in this, we're managing other people's money, and ultimately it's about their bottom line, what their experience is. And so I like to use this phrase X plus one. It applies to a lot of things, but when it comes to money management, the X is about the expectations. So it's about creating and managing those expectations. And again, it's talking about your philosophy, what you believe, and then how you will perform in different market conditions. Quite frankly, as a money manager, the X part should be easy.
Hey, this is Josh Vlade, and I've got my co-host here, Paisley Nardini. This is the Building Better Portfolios podcast, and I am super excited to have Rusty Vanneman on with us today.
It is great to be
Rusty.
here, Josh and Paisley. Excited for the interview.
It's great to have you on. You are not only a friend of mine, but you are also my boss in my previous job. So hopefully, I did a good job, and you don't have any.
Hey, I came on your show. All
me.
Good. Absolutely. Yeah.
Good sign. Well, let's dive in. So let's start with just a question to get to know you a little bit better, Rusty. What's something about you that most people may not know?
All right, so I've been in the industry a while, and I have been interested in investing really since the college days, and even minored in it, and my whole career has been dedicated to it. But probably the curveball that gets a lot of people is I did take some time out and I worked on a cattle ranch in the Sandhills of Nebraska. So I was a cowboy for a while. Not a very good cowboy, but I did work on a cattle ranch for a while.
Ooh, I'm just thinking about Yellowstone is in vogue right now.
Yeah,
kind of lean.
It was great. It was. I did everything. The brandings, the roundups, all that stuff. It was great. Great experience. It did not pay as well as investment management.
That's
though.
Awesome.
Otherwise, you would have stuck around.
Yeah, and probably more physically demanding, right? That's a tough job. That's awesome. Well, let's dive in a little bit about your history in the asset management space, because I know that you've had a long career, and I'd be interested to kind of hear a little bit about that, but then also shift the conversation to, what are the, things have changed so much, right, over the last 50 years, and just the vehicles have changed, all those things. I'd love to hear maybe some of your thoughts on what you're most excited about.
And I think you just threw 5 questions at me, but I think I can handle it here. So, all right, so I have been in the industry for over 3 decades now, and it started off cold calling for Lehman Brothers back in the 80s, so it does go back a ways. But I've spent the last 20 years mostly being a chief investment officer for a couple different firms, and chief investment strategist at times. So I've managed teams, I've managed investment philosophy and process, I've managed the messaging that goes with it. I did work at Fidelity Investments for years in Boston in their FMR Co. So that was a really exciting experience to work with some of those legends at that time. Peter Lynch was down the hallway and stuff like that. That was really cool. I did leave Fidelity and went to a registered investment advisor in Boston, where I was for 12 years. It was one of the first IRAs that had $1 billion in assets, and my job there was to build a process and build a team. So done a lot of different things. It included being a senior market strategist for E-Trade, and it was during that time that E-Trade had those commercials, so easy even a baby could do it. So if you went to the website to check out that commercial, sometimes regretfully, you got a really dorky picture of me saying, check out Rusty's webinar or his commentary. So anyway, that's a little bit about my background. In terms of probably the biggest changes, clearly I think the biggest changes, and it's probably been partly a result of kind of what the market has been doing in recent years, but it really started back in the 90s too, is that active management was such a big part of investment management. It still is, but sort of the passive part has really, really grown. And not only has that determined flows, but it really has changed even active managers a lot. Where active managers, for instance, let's just go back to the 90s, it was much more of a cowboy style, speaking of cowboys. You saw a lot more tracking error. In other words, they could just be a lot different than their benchmarks. They could hold a lot more cash, and they could do a lot of things like that. But I think as the industry got more lucrative and more people came into the industry that were like straight A students type stuff, and they didn't want to be wrong. All of a sudden you saw the sort of the active component really compress. In other words, people just acted more like the benchmark. And that has really been the case now for a couple decades. I think that has been a big part that's changed. Technology, of course, has really changed, and it's just really computing speed has gotten so much faster, and that's allowed things such as more personalization of portfolios, and that's been a really big thing in the industry in recent years. That's been around for a long time, but because of the computing power, it's just been available to so many more investors, which I think is a pretty good thing. And probably the other thing that's changed, if I could just add, is behavioral finance. And some people sort of act like this is a new thing. I actually took a class on this with a portfolio manager in Boston back in the 90s, so it's been around for a while. But I think there's a lot more emphasis on behavioral finance, just being more aware of who you are as an investor or as a manager, and I think that's a really good thing.
I might have a follow-on question, just thinking about, we talked a little bit about technology and what's changed, active versus passive. One thing I've always wondered is, over the course of the last couple decades, investors, whether they be retail or institutional, have way more information at their fingertips. They used to have to go through, professionals, advisors, portfolio managers to get access to trading and investment insights. And so now that everyone has this at their fingertips, like, how important is the relationship component in the industry? I think it's still at the crux, really. I think it's a relationship business. I think people want to do business with people they trust. But have you seen shifts in how much there's this reliance on kind of the relationship?
I think that's a great point. I think that's as important as ever. And even if we think that a lot of investors now are not going to have advisors at some point, the reality is, once people get older, once their portfolios get larger, there's such a strong desire to have a financial advisor, and the statistics bear it out. You really should want a financial advisor. Really, most people do, for all the different reasons. So I think relationships are as important as ever. When it comes to information, I think that that is somewhat of an issue for many investors who think they can go alone. I mean, a lot of smart people that want to act on all that information. There's more than ever, and again, it's free. But it needs to be curated, it needs to be processed, and again, I think that goes to why you want a disciplined investment approach or why you want a financial advisor, is to sort of process and curate that information.
And just to add to that real quick, I think that financial advisors do so much more than just investing, right? I mean, a good financial advisor is going to take a holistic approach to your overall kind of financial life, not just investments. And I love that you brought up the behavioral finance side of things, because it's such a big thing. In this recent sell-off in April, I don't know how many clients who are very intelligent clients. These are highly intelligent people, PhD type backgrounds, who were just so scared and wanted to pull out of the markets. And that behavioral finance side of things, being able to help them understand their emotions and walk them through and say, hey, now's not the time to sell. Like, when you feel the most sick to your stomach about the markets, that's actually probably the best time to buy, is what I've experienced in my career. So that's a huge.
Well, discipline is such a key to investment success, and behavioral finance kind of gives you awareness of what your weaknesses or non-strengths are. And I think it's useful if you're a professional investment manager. It just gives you better insights into your own decision making or team decision making. And at the individual level, even if you're working with an advisor, just having sort of a cursory knowledge of some of that, again, also helps. But it also suggests why many people, again, should have that financial advisor. It isn't about all the technical skills, but it's also about the education and the encouragement a financial advisor can provide.
Rusty, you were talking about all the changes you've seen over your 3+ decades in the industry. Walk me through just a little bit, how, like, if you're a portfolio manager, or if you are, and maybe you're an asset allocator, right, at a higher level, or maybe you're an individual stock picker. I mean, how do you think about differentiating yourself within this ecosystem, knowing that so many people have gone more down this passive road, and even active managers have gone more down the passive road? What are your thoughts on that?
Well, I've always believed that investment manager, they should be disciplined. We've already talked about that, but they also need to be different than other active managers, particularly if you're an active manager. Is how is your thinking different than the rest of your peer group? And so I think that's really key. In terms of different or deciding how you are different, I think it's always rooted in you have a mandate. Whether you're managing for an individual or for shareholders, you have a mandate, and you have to think about the philosophy behind that mandate. So what do you believe? And when I say what do you believe, how do you think markets work? And what are the drivers of returns? And how does your process take advantage of some of those beliefs? So what is your edge in terms of manufacturing that rate of return? I do think ultimately is when we talk about all these things, something else that I think has changed, and it's something that part of my evolution too as a money manager, is that there was so much emphasis early in my career about the investment return beating the benchmark. And I think that's still important, but it's really more about the investor return. We're in this, we're managing other people's money, and ultimately it's about their bottom line, what their experience is. And so I like to use this phrase X plus one. It applies to a lot of things, but when it comes to money management, the X is about the expectations. So it's creating and managing those expectations. And again, it's talking about your philosophy, what you believe, and then how you will perform in different market conditions. Quite frankly, as a money manager, the X part should be easy. You should be able to create and manage those expectations and just deliver on it, whether it's whatever your style is. But the plus one's the key, and the plus one is what makes you different. And a lot of times that's not about manufacturing a rate of return. It's more about the client service. It's about the relationship. It's about the communication. It's all those other things that go into it. And for an investor to have a good return, he or she needs to be comfortable and confident with that strategy and stick to it over time. The ability to kind of stick with a strategy over time is often the key to long-term success. And when I say long-term success, it isn't about beating the market. It's about hitting your goals and your objectives.
I love this X plus one concept. I think one thing I always talk about is 99% of our industry, and really I think any industry, satisfaction is driven by the expectation and the communication of that. And I think that's a big part that's missing, is this like blanket belief or approach of like everybody just wants like sky high alpha. Everybody wants as much potential return. And of course, at the end of the day, we do. But the expectation you set up front as to how a process is going to go, how your strategy is expected to perform when there's risks, when there's opportunities. And if you're not communicating that appropriately, you're misrepresenting the expectation, and out of the gate, you're already doomed to fail. And to your point, Rusty, is thinking about, whether it's an investor firing a PM or whether it's a client firing a financial advisor, it's often not because of the investment performance. It's the fact that they didn't understand the expectation of how it should behave or how it should perform, and then there wasn't good communication. And I feel like if everybody in this industry spent more time focusing on those components, a lot of the other things would work for them without having to, focus so much on that performance aspect. So I love that
Hallelujah.
X plus one concept.
To add on that really quickly, and I think there's another framework to think about it, is this idea of investments as they go passive. It's become a bit of a commodity, right? It's just about who can do it for the cheapest. But then you have all of these commodities that can turn into a brand, into something that's really valuable, right? Like Rolex. And like if you just melted down a Rolex, you would, I don't know how much that all the gold and whatever it would cost, but I can promise you it would cost a lot less than buying a Rolex, right? So how taking a commodity and turning it into a brand, and I think that X plus one formula is a key component in that process, which I love that also. That's awesome. Well, shifting topics a little bit, knowing that you were my boss, and I did see you building like highly effective, high performing teams. I'd love to talk a little bit about that and just your philosophy around leadership and building high performance teams.
I've been fortunate to have the opportunity to help build out multiple teams, and so I do have a couple takes on it. I do think it begins with it's a recruiting and making sure you have the right people on board, and it's when you hire people who are truly kind of passionate about this business, and it could be whether it's investment management or financial advisor. I mean, I think that is number one, such a key to it, because then work isn't work. It becomes something bigger than that. It can become a calling and a mission. And if you work those extra hours, it doesn't feel like you're working extra hours. You're just doing the right thing. So I think you get the right people on the team is key. And then I think once you get the right people, you need to create an environment where, it really comes down to culture, and culture is really critical. And one of the guests on my podcast, Invest Well, Be Well, Jim Ware, W-A-R-E, is an expert on culture. And so he had a lot of cool things about it. But I've always felt culture is sort of the magic ingredient. I feel like an investment team is really like a sports team. It's something where culture is really key to success, and everybody has to be working for the same things, and it's really about performance. And so what can you do as a leader or as a coach to help everybody perform at their highest levels? And a lot of things go into that. You do have to create an environment where everybody feels, I guess the fancy phrase is psychologically safe, where they can debate and disagree with each other. I think that's a really, really key thing, because that just creates trust. And I think it's really important for everybody to build a relationship with each other and understand how everybody sort of works, what their biases and preferences are. People should buy into the philosophy. If people are disagreeing with the philosophy, that kind of doesn't work. But you're always tweaking and enhancing the process and really trying to always get better. So basically, you got to create an environment where they have the emotional support, the resources to do their job, and then you have to let people on the team, particularly as young as possible, or I should say as inexperienced as possible, to kind of own something and to have that ownership and have that accountability. And then everybody feels relevant, everybody feels like they're contributing. And I always felt like in our meetings that my vote as a chief investment officer was the same as the vote as the most junior person in that room voting as well. And I think those are some of the keys to it. It's basically a team, and how can you maintain that team performance over time, and culture is really that key.
Maybe a question I would have, and something that I've recognized over the last couple of years, and this is not from like necessarily me being a leader, but me just looking around and kind of recognizing some patterns at various firms and different kind of seniority levels, is oftentimes there are underperformers on a team. And the more that you dig into it, the more that you realize it's not the individual, it's not their capacity, it's not their wherewithal that's maybe falling short. It's a lack of direction, and it's a lack of structure. And as we know, many people require a lot of structure, but with structure, they can be top performers. And so in your capacity as, a leader in various roles, like how important is that for a leader to be able to recognize? How are you able to react to that? And I say this more from I'm a self-starter. I don't need a lot of structure, but as I'm maturing and looking around, it's realizing that oftentimes it's easy to say so-and-so fell short, let's kick them to the curb kind of thing. And then you give them a little bit of structure and all of a sudden they're firing on all cylinders. So I just think it's playing into different strengths and weaknesses. But do you have any thoughts on that? Do you have experiences where you've seen that play out?
Well, a couple thoughts. So first of all, again, it goes back to the recruiting. And so in terms of things that I've looked for in hiring people to a team is a couple different things about their mindset. I mean, one is there's some evidence of an achievement orientation. So they've had some evidence of getting things done. But another key thing is a growth orientation. So they're always trying to get better. And some people can say they're competitive, and I think being competitive is really being competitive about yourself and always improving. So you have to have that initial mindset, and then as a leader, it is creating the structure and the expectation, so they know what they need to deliver. There's also the expectation that I'm also looking for an X+1 out of the teammates too, where if somebody's working for me, look, here's the expectations. But to move forward for the team, for yourself, and most importantly for our shareholders, is you have to somehow figure out to go above and beyond that. I don't know what that answer is. It usually ties into their genius. In other words, what are their strengths? What are their interests? And as a leader, that's something else you have to try to figure out as soon as possible. What is that individual's strengths? What are their interests? What is their genius? And you want to make sure they're spending most of their time in that area of genius.
Maybe my last question on that was, Do you play into the belief, whatever the current generation is, it's always the generation after the current generation that everybody wants to point and say, oh, they're lazy and like they're never going to make it happen. Do you play into that, or do you just think like each generation has different skill set and a different approach to how they
Well,
are
having
productive?
been through a few generational changes now, I like to think that always does happen. It does. Now, there is something about the current environment that is different for the younger generation, and it's not their fault. So it's not the way they're wired. Is that we had COVID, and people are working
Yeah.
remotely. And so the younger generation, like the 20 somethings right now, have been somewhat deprived of an environment where they're around everybody else. It's not their fault. But it is a disadvantage to them, and somebody in their 20 somethings has to, well, the manager and also the individual themselves, they have to figure out how to continue to improve and get better and to accelerate their growth. And that is the challenge for a lot of people right now. Again, not just the 20 somethings, but also the managers of those 20 somethings.
Yeah, I mentor a lot of undergrad college students that are entering the workforce for the first time, and a lot of them will come to me and, I have two great opportunities, which one makes more sense? And I always say, like, whichever one is going to get you in front of people and it's going to bring you into an office at least 3+ days a week. I was like, I think back, I can't imagine being even remotely successful in my career if I was working from my home office, which I am today. Currently, I have been for the last 8 years. But you're starting out, you need that osmosis. You need to be surrounded by people, and it's such a deficit, I think, for that next generation. To your point, Rusty, that they really have to go out and try to get in front of people and be in person. And yeah, I think it's really important. But yeah, I think the debate, because it used to be the millennials that got the flack for being like lazy and such, and so like now at least we have another generation.
Well,
after us
now
that
the
we can point
millennials,
to.
there are issues there. No, I'm just kidding.
That's for the next podcast. Move on,
One
Josh.
other
Next
thing is
question.
it isn't just about working remotely. I mean, the reality is sometimes people work remotely. It isn't like they're the next suburb over. They could be 500 miles away or 1,000 miles away. So, again, that is a challenge. And I'm not saying I have the answers, but I think one thing to do is you need to bring everybody together. If they're spread out all across the country, and just bring everybody together just for a quick meeting, and just so you can hear everybody's voice. And as Josh experienced this, one of the things I like to do, particularly as the team got spread out across the country, is we had roughly 30 people on the investment team and 30 minutes. So how in the world is everybody going to talk for 30 minutes? So what we basically did is everybody had to answer 3 questions. So now that sounds even more daunting, right? But we always finished on time. And essentially, hey, just tell everybody on the team what you're working on. Just real quick. What's like a big accomplishment or big issue, just so everybody has insight on what everybody else is doing. And the second thing was really open-ended, but I felt like it really got us to know each other, and I just called it one cool thing. Just tell us one cool thing. I mean, maybe you just saw something cool on Netflix, or maybe there was some cool stat on the market. Hey, it's your choice. You tell us what one cool thing is. And then the third thing, which I thought was also good, at least from my point as a CIO, I wanted to see how people thought about an issue. So I would give a new question every week about something about the markets or the economy. It would be, hey, where do you think the 10-year yield is going to be at the end of the quarter? Something like that. And what is your thought process behind it? So in 30 minutes, 30 people, you had 60 seconds to answer those questions. And we did it on a weekly basis. And I felt like people got a chance to know everybody else, how they were thinking, what they thought was important to share with the team. But it also gave even the youngest people on the team an opportunity to speak up, and we could hear their voices as well.
That's really cool. I love that, especially in this day and age when there's so many meetings on your calendar and we just go in circles and they're not productive. This at least gives people a little bit more tangible. Like now I feel like I know you, Josh. I know you, Rusty. I can give feedback and think through like the lens of how you're thinking. So I think that's good advice.
I'm having flashbacks right now to when you were my chief investment officer and I was your deputy chief investment officer, and all, yeah, a lot of fun.
Yeah,
And I do remember those questions. Yeah, good times. And a couple things I wanted to point out that you mentioned that I think are very meaningful to me is the coaching. Like at the end of the day, what's a coach's job? And every manager is a coach. It's to get the most out of their employees. Which could be sounding like nefarious, right? Like from shareholder creation value or whatever you want to say, but it's really actually helpful. Just like a player on the field, like if you're coaching soccer, you want that player to play to the best of their abilities during that game. And that's the same thing as a coach, a manager in a job, is helping your team execute at the highest level possible. And I think that's the most fulfilling
To
thing you
quickly
can do
follow
as a
up on
coach and
that, the
manager.
reason why that coaching is so important is it isn't just about the short-term production. I mean, that's obviously part of it, but it's also letting that person know this is really for your long-term development. And so you're learning now. I'd always use the expression, it's the learning power translates into earning power over time. But the other thing I try to stress, it isn't just about you. It isn't about the team short term. It isn't about just you long term. But again, it is about our clients. And something I didn't do this all the time, but something I really like to do is a lot of times in meetings, teams got so big sometimes we couldn't even pull this off, but I would want to put an extra chair in a room and just have that empty chair sitting there and say, that's our client. They're listening to us right now. So we're doing it for the clients.
Yeah, that's a great reminder, right? Like, why do we do this? And having that there, I think, is a powerful message. Let's shift, and because I know you really well personally, and I know how high performing you were at work, but I also equally know how high performing you are outside of work. And I know that you love to hike, you like to exercise, all these things. Like, talk us through, because the podcast is called Building Better Portfolios, with the tagline "And Better Lives." And so I'd love to hear about how you approach building a better life outside of work.
All right, so you talked about a better life. So how does this all translate into personal? But first of all, the more you take care of yourself, the better you can take care of your own energy, your time management. It enhances your own decision making. And if you're enhancing your decision making, again, that ties into obviously the decisions you make professionally, and again, the service you provide to your clients. So it's all really interrelated, I do believe. And I feel that if you enjoy your work, that obviously makes your life more enjoyable, and that's a better life. And so if you're in a position, again, we talked about, if you feel like your career is a calling, and it just makes life better. Why? I mean, if you're spending most of your waking hours in a position you don't like, it's hard to really say you're having a better life if you're just living for the weekend, or if you're just living for Netflix when you get home from work. So I think that's really important. When it comes to sort of how to take care of yourself, and again, the concept of taking care of yourself always feels so selfish, but you kind of have to take care of yourself before you can take care of others. And when it comes to taking care of yourself, it really comes down to some very simple things, I feel. And you could get very elaborate, and if I actually went through everything that I do, it would sound elaborate. But I think the most important things is, starting off with just a morning routine of some sort, whatever it is. To win the day, you have to win the morning, in my opinion. You just can't wake up, shower, go to work. I just think you're behind the 8 ball. And it makes such a difference. And it shows up in all the data too. If you got my Garmin's, my Oura rings, if you got that morning routine, it translates. I mean, it is you can quantify it. It really works. Then you just have to be active over the course of the day, and you don't have to hit the treadmill hard or stuff like that. And the 10,000 steps a day, I mean, that's just an arbitrary number, but the point is relevant. You've just got to be active, and that again translates in so many ways, personally and professionally. And probably the only thing I do that's more recent is kind of related. It's the bookend to the day, and it's the evening routine. I'll admit I have not done this most of my life. Usually I'm just go, then go to bed. But again, if you actually can just carve out an hour just to wind down, relax, it makes such a huge difference. Again, and not only is it you just feel it on the inside, again, it shows up in all the data. It's incredible. You just got to wind down at the end of the day. You can own that part too.
I think your point on the morning routine, I've always woken up crazy early for work, which means I don't have time to work out in the morning. And so I would always put it off to the end of the day. And now that I've forced myself to make time, which just means I go to bed earlier, which in my perspective, anything that happens after 8 o'clock most nights, you're being lazy. You're probably sitting on the couch, you're sitting around. So it's if I can go to bed earlier, wake up earlier, the movement in the morning, both for mental clarity and the physical calmness it gives you throughout the day, you feel accomplished. To your point, Rusty, is you've won the morning already. So now you feel more incentivized. It's that momentum trait of now I'm going to win the day. It's made a huge shift in kind of the energy that I bring throughout the day versus in the past when I would wait until after hours to like get my workout in or movement. And you're always tired and exhausted, and it's easier to make excuses then. And that just kind of compounds over time. So
Yeah,
I concur.
Rusty, this is what I always appreciate about working with you is you're very principle based, right? And yes, like the 10,000 steps is like this very specific goal, but it's all about the principle. The principle is to get yourself moving, and I just want to echo with what both of you have said. I mean, I've transitioned my life quite a bit of late to make sure I'm exercising in the mornings 3 to 5 times a week, and it has made a ton of difference in just energy levels, how I feel throughout the day, how much more productive I am. And so it's something that I'd always try to sneak in exercises after work, but it's so much more effective when you do it in the morning. And so that's awesome. Well, Rusty, I know in your previous role as Chief Investment Officer at Orion Advisor Solutions, you've ran some very successful podcasts, and I know that you've launched a new podcast. Do you want to tell us a little bit about that?
Sure, thank you for asking. So the new podcast is called Invest Well, Be Well. It's kind of the same stuff we're talking about here, right? And I've hosted over 300 podcasts over the years, and it's been weekly for many, many years. And I kind of always sort of riffed on, and the tagline for Invest Well, Be Well is wiser investing and stronger living. And so I really hit those two components with every guest. And the wiser investing part is really just sort of long-term principles, as we just talked about as well. What do we think is wise investing? And it's not really necessarily my thoughts, it's really my guest thoughts, get their take on it. We've really been lucky to have a lot of great guests so far. But the second part is a stronger living. And again, it ties into a lot of stuff we just talked about. I mean, what are the things you need to do to just perform at a high level? It isn't just about achieving. It really is just having a better life. And we've had some really good suggestions from our guests so far, and we're off to a great start. I think I've published 7 now, but we've already recorded probably another 7 already, so we've already filled up the pipeline. Great podcast later on today. He just called moments ago, so if people heard like the telephone ringing in the background, that was my guest coming up, probably with questions on my questions. But so anyway, it's off to a great start. Invest well, be well.
I think it's awesome too that on this podcast we get to invite people that have their own podcasts. And so maybe Rusty, Josh, and I could ask you for our own benefit, and then also for any listeners, because the joke is now is like the new midlife crisis is starting a podcast, and we're all guilty of it. So, but any like sage advice, anything as it relates to developing the concept or how you engage with guests, or anything that you think would be helpful for people to learn from, given your experience?
I think you have to have an idea. We talked about being different early on. So what makes your podcast simply different? And what is the theme? What are you trying to accomplish? My podcasting has sort of evolved over the years. Very early on, it was just about our own team and our own thoughts. And I think that could still be useful, but it evolved in our case where it really became, it wasn't about me, it wasn't really about my team, it was really about our guest. And what did they have to say, and how would that help our audience? And it really became, and hopefully I thought, it wasn't just an asset to me, but more importantly, it was an asset to the audience, and it was an asset to our guest as well. And something I've always shot for too on the podcast is hopefully that they were evergreen, that a podcast interview wasn't just relevant today, but hopefully is relevant 3 months from now, 12 months from now, 3 years from now, that it was an asset to everybody that was listening. And hopefully that people just get actionable takeaways, that after they get done listening to it, they can say like, here are the 3 things, or here's the one thing that I can implement moving forward.
Yeah, I think that's the tack that Josh and I have taken as well, is there's so much content that's available to everyone at our fingertips at any time we want it. And so rather than having our podcasts focus on, what's going on with GDP print this week, or what's going on with, Fed rate cuts, it's more of like these evergreen kind of little bits and pieces of strong takeaways that people can implement irrespective of their seniority level, where they sit within a firm. So I think we have similar philosophy behind it.
I mean, the short-term stuff, it's like letters in the sand. The wave's going to come in and wash it away, and it's not relevant after that. So,
yep.
Rusty, last question,
one too.
and I love this question. No, this is going to be great. Who is somebody that made a big difference on your life or your career, made a big impression Like this is an opportunity to maybe kind of point somebody out and thank them for and what they did for you. I'd be interested.
On my old podcast, I ask this question all the time, and now I don't ask it nearly as much, but I love the question, and because I really love to hear what other people have to say. It gives them an opportunity to say thank you to people, which I think is really great, but also what are the lessons they learned from them. And virtually everybody gives a multi-part answer, and I'm going to do the same. So, I mean, first of all, there's so many intellectual influences, people that you've never actually met, or maybe you've met and you just follow their work that obviously have had a strong influence. And in my case, it's like Sir John Templeton as an investment manager and a person has been a big influence. I grew up in Nebraska, so Warren Buffett, needless to say, has to be an influence. It just is. But outside of that, when it comes to real people, probably the biggest impact on me in terms of the way I work and the way I think is just really my father. And so his energy and enthusiasm for life is, I hope is translated into me. And someday I can hope that I have the same amount of energy and enthusiasm that he has. But outside of that, obviously I've had key bosses that have really set me up for my career. They really believed in me and they really opened the doors for me, whether it was Art Lushaning at Fidelity or Eric Coburn at Coburn Insight or the Clark family at CLS Investments / Orion. They all believed in me and gave me incredible opportunities. But when it comes to who I learned the most from, without a doubt, it was my teams, the people I worked with. And I learned stuff even from the most junior analyst. And something that I would do is I would force a lot of them, even the interns. I didn't do this to everybody, but a lot of times I would say, at the end of the day, give me a question or give me 3 questions. And usually a lot of that stuff was obviously really basic and obviously sometimes pretty naive because I just didn't know yet. But sometimes they asked questions that were like, wow, I've never thought of that before. And it was really, really cool. And then, of course, just all those meetings with in the investment teams and just all the one-on-one conversations and all the hallway chats and all the times that either I was able to stick a foot in the door of an office or vice versa. And those conversations, I learned more from those conversations and those colleagues. And that's who I probably owe the greatest debt to, are those individuals.
I like the comment about, rather than just answering with somebody above you who was wise and had a great experience that you absorbed, it's really thinking about all the component pieces, everyone you interact with. And like you said, sometimes it can be the junior person who's inexperienced that can put perspective on what you're doing, how you're doing it, why you're doing it. And sometimes those naive questions really make you ponder, because what we're doing, like it should be straightforward, and sometimes we overcomplicate it. And so those naive questions make us pause and reflect and say, hey, maybe there's a better way to do this. Maybe we didn't think about the obvious. So I think it just shows, I think, a lot of the maturity as well as understanding that it's not just the senior people that are always giving all the great experience.
One other point on that asking the junior analysts, forcing them to ask a question, think how scary that is. You're brand new at the job and you have to come up with a question or 2 or 3 to the CIO. I mean, that really throws you in the fire and really have to. So it's all about accelerating development and ownership and just being safe to ask questions as soon as possible, because ultimately that benefits everybody, the team, the individual, and again, the clients.
Yep. Well, hopefully we made you feel
There was only a couple of them that made me sweat. But it made me a better person, right?
Yes, exactly. We're building character today.
Exactly. What I love is that principle that underlies all of that is that constant improvement, right? Like just constantly improving, and the fact that you can improve and learn so much from everybody. And sometimes the lesson is not to do that, and sometimes the lesson is to do that, and so, which is awesome, because I do think you can learn from everybody. That's a great answer, Rusty. Thank you. Okay, well, with that, episode 3 it comes to an end. Rusty, thank you for being a guest, and thank you for being a friend, and thank you for being a very caring and kind boss.
Well, thank you, Josh, and thank you, Paisley. This was a lot of fun. I really appreciate the opportunity to talk to you.
Yeah, likewise. And again, tune into Rusty's podcast as well.
That's right.
There's more the merrier.
Thank you.
Awesome. Thanks.
The views and opinions expressed on this podcast are those of the host and do not reflect the views, opinions, or policies of any current or former employer, affiliated firm, or client. The content is provided for informational and entertainment purposes only and should not be considered investment, legal, or tax advice. Nothing discussed constitutes a recommendation to buy or sell any securities or investment products. Listeners should conduct their own research or consult with a qualified professional before making any financial decisions. The hosts are speaking solely in their personal capacities, and the podcast is not affiliated with, sponsored by, or endorsed by any firm or organization with which they may be associated.